We've got a lot of tax changes that are coming down the pike, don't we?
Yeah, we do. And I've been, going through these updates and the conversations about the new draft that is not yet passed, and only about how is it going to, come into place, like how they're going to implement it. Talks about all of them earning more than $400,000 will be taxed at a higher rate. No step up in basis. They're taxing unrealized capital gains. All of these things. I mean, I'm sure there are people who are getting really nervous.
Well, I can understand the fear. And when you're looking at tax increases on potentially dividends and long-term capital gains, unrealized gains, real estate, businesses, and estate taxes as well, I can understand why there's a lot of concern. But it's really important to remember that these are all proposed. And by the time they run through the meat grinder that is Congress, we're going to end up with something completely different on the other end. But I'm pretty sure that taxes are not going down. They're going to be the same or higher. And so we do need to start taking some actions and looking at what we can do for clients.
Also, I would say that it's going to be different for every client. Being a tax professional, I'm always, very protective about them by telling them that, I want you all to pay the least amount of taxes and go ahead and pay taxes now, because definitely taxes are going to go higher. But I have to think about their, financial goals, what they really want. If they do not have a great opportunity right now, it doesn't make sense to pay taxes right now and, save on the future, because they don't have a better opportunity right now. Only if there is an opportunity which is already planned and, which will benefit them, that's when they should, go ahead and take a call that, okay, let's pay taxes now and be better off going forward.
Hearing a CPA say, let's pay taxes now, is turning the conversation on its head to start with. When we're looking at taking action, our clients are running into problems when they are selling today because they might have a higher tax consequence in the future, or making decisions without checking with their professionals. And it's really important to stay the course. It's important to make sure that you're paying attention to your goals, as well as taking tax considerations in and planning the process.
Yeah, I think it's just a matter of fact that you need to tell the client what they should expect. Once they know what they're going to expect, there is no harm whether they pay taxes now or later. It's just that you should be prepared on the benefits that you're going to get. Also, when it comes to paying taxes, the lower you pay in taxes, the lower cash flow you will have. So you do have to weigh the options, that there are times when you're trying to save your taxes, but at the same time you're locking away your funds for a long time and you don't have the cash flow that you need maybe for the goals that you want.
So this is the reason that we work very closely together, is because we bring two different perspectives. Typically a shorter term perspective where you're looking at minimizing taxes this year or next year, where my perspective is looking at a much longer term during a client's lifetime. And that conversation, bringing those two perspectives together, can have a significant impact for clients in how they manage their money and how they manage their lives.
Correct. Ultimately, we both have the same goal, that the client is benefited and the client has the best result, what they're looking for.